Welcome to this presentation about Russia, macroeconomic facts and outlook. I'm Dr. Anthony P. Müller from APM Sovereign Risk Analysis. Let us first have a look at the currency. Now here we have the Russian ruble per US dollar, and we see there has been a huge devaluation in '98, and after that we had a relatively long period of a relatively stable phase of the ruble. But about 2014 things have already changed. That is, things have changed before the invasion into the Ukraine and the sanctions, and actually since then we have this well-established trend to ever more devaluation of the ruble against the US dollar and the other currencies. Now what we can also observe is the relatively high volatility of the economic growth. The Russian GDP annual growth rate is very volatile, but as you can see, there has always been, after a downturn, there has always been recovery. This is also interesting to see. That's kind of a yo-yo economy. And we can see furthermore that the stagnation of the GDP per capita in purchasing power parity has been actually stagnating since about 2007, and what we can at least see here, interestingly enough, in the past couple of years there has been a new upward trend. So this is another sign that the so-called sanctions won't work when they are intended to crash the Russian economy. Very impressive is the performance on the labor market. We had this crisis, 98, and with an explosion of the unemployment rate up to 15%. And since then we have a clear downward trend, and one can say that we have full employment now in Russia. The Russian inflation rate is quite interesting. There's also a very high degree of volatility. We've had this strong reduction from 2015 to 2020, then an extreme rise even before the invasion, then this another peak here around the time of the invasion, but then right after 2022 there's been a strong fall of the inflation rate again in a short period of time, and in middle of 2023 we are now on a new upward path to about approaching 10%, and we can also see that the central bank tries to curb this trend. Now let us have a look at the Russian central bank. So here we can also see, if we look at the long-term trend, there has been no definite change of the balance sheet of the Russian central bank in its trend. So we have an increase of the money supply given by the money creation of the central bank, and it has been stronger recently, and this is also reflected in the inflation rate, which as of now the central bank tries to curb. So we had this strong lowering of the interest rate in 23 and the rise from July 23 up to now. So the central bank tries to curb the inflation rate. It is interesting to see that the current account of Russia in terms of its gross domestic product has been positive for a long time, and the sanctions did not change that. So we can say, okay, we are still about of this average, a little bit lower for 4%. And actually, as you see, there's been a new increase again. So in this slide, we can also see that the sanctions have been ineffective. Here the recent numbers of the numbers since 2015, where we can see this longer term surplus in the current account. So the Russian government debt in terms of GDP has come down drastically since 2000, when we were above 50%. And it has been very low since 2008, actually 2007. And there has been no uptick recently, despite of the war. So this is an interesting fact to notice, that the war efforts are possible without an increase of the government debt of Russia in terms of its GDP. So government spending has been rising, but at the same pace, the economy has been growing. Now, when we look at the external debt, we interesting see there has been a strong rise with 660 billion US dollar around 2012. And since then already there has been a decline, which of course has become even stronger recently. So here we also see as a war effect not a great impact. And with around $300 billion, it is surely bearable. So Russian foreign direct investment in Russia is also well established in the trend. There are upward trends, relative stable tendency, and downward trends, and recently actually there's a new upward trend. Now finally we come to the crude oil production, and there has been a strong expansion since 1998. Then also a significant expansion 2006, 2005, 2006. But the peak has been already around 2015, and then we had a strong decline. And since then, since 2020, there's actually an upward trend again. So here we also see no impact of the sanctions or of the war. We see here the impact of the global pandemic. But here, after 2020, there's this upward trend again. So what is our conclusion? The Russian economy is in a better shape than has been reported widely. The sanctions surely are ineffective in terms of bringing down the Russian economy, and most of all, the war efforts have not led to either hyperinflation or a rising indebtedness of the government. In other words, there is still a wide space for Russia to actually increase its war efforts. And of course, new sanctions, whoever will and wants to apply them, will have even less effect than those that were already established. Thank you very much.